Hey, welcome back. I know it's been a really long time since I recorded a video for YouTube. The markets kind of kept me really occupied the past couple of months. This is one video I've been wanting to record for a really long time, so I thought let's utilize this weekend and record a video for YouTube. Now this video has got to do with the Tata Motors earnings trade that I put on in the last quarter. You might remember that Tata Motors posted really bad numbers and it kind of gave a black swan move post earnings announcement. So fortunately, unfortunately, I did have some positions in the counter. So I'd like to share my experience. What kind of positions did I have? How I managed those positions, and how I got out of this whole Chakravyuh. So let's have a look at the positions that I had in Tata Motors. So Tata Motors was to announce its numbers post-market, and prior to close, it was trading at around 183.84. So I put on some straddles at 185 strike. The IVs were decent. Now these were not naked straddles. What I did was I bought downside protection at 140 and the upside protection at 230. So effectively, I turned the whole thing into an iron fly. I had these black swan covers with me. The iron fly was very wide, and the net credit received was around 17 bucks. So this whole 45 pointer iron fly went for 17 bucks. That is the trade that I had prior to the earnings announcement. So the company announced its numbers post market, and they were nothing short of a disaster. The next morning, Tata Motors opened gap down, and it was not a small gap down. It gapped down by 30%. Now the share was trading at below my downside protection at 140. Let alone being away from my straddle, it was even below my downside protection. So I was already kind of sitting at a max loss. There was not much I could do at that point. So what I did was I just sat peacefully, not really peacefully, but yeah, peacefully in the sense that since my position sizing was under control, and I'd accepted the max loss right at the moment I'd initiated the position, so I could sit in the trade. I let the share do its thing and just sat peacefully. Now, what happened was after a while the share started climbing up. Rather, immediately post open, it came up, and after a while it started hovering around the 150 mark. Now, to adjust the 185 straddles, what I did was I let those straddles remain as it is, and I added more straddles at 155 strike. I had a view that a lot of negatives in the counter were already factored in now in the price, and the downside risk was not as much. So what I did was I added 155 straddles and I bought downside protection at 135. I did not want to risk losing more on the downside, so my downside protection was closer. Now, since the gap down was huge, the IVs went through the roof, and the option premiums were very expensive. So in order to play on these high option premiums and high IVs, what I did was I initiated some positions intraday. These were straddles that I'd put on intraday. The straddles were at 150 strike. These straddles went for somewhere around, I think, 20 to 23 bucks, and I gained 3 to 4 bucks on these straddles intraday as well. I closed these positions by day end. Another position that I initiated were a few lots of strangles. These were strangles at 1 SD, I think. These I carried positionally because the IVs were so high and so rich. So I carried these straddles overnight. So at the end of the day, I had two kinds of positions. One were just the strangles I talked about, and the other were the original positions of the 185 straddles, and the position that I'd put on against those straddles, 155 straddles. So 185 straddles and 155 straddles. The downside protection was at 140 and 135. I did not do anything to the protection of the earlier 185 straddles. So as I mentioned in the earlier slide that I had a view that a lot of negatives were kind of factored in the counter, and there was not much scope for a downside from here. That was my view. Now what I could do was I could just sit, hold on to the trade, and have patience, keep patience. And this is something which is very hard to do, especially when your position has gone way against you. You're sitting on a big MTM. So having patience is something which is hard to do, and I think that is the only thing which can help you cope up and recover your losses and maybe even turn your position into a profit. And my patience did pay off. My desired exit, I got it on 22nd of February after a couple of weeks, I think. You might be wondering whether I exited for a profit or a loss. I should tell you that the position did have a relatively big MTM because it had gone way against me. So let's see what the end result was. You might have already guessed by my smile that I did exit the positions at a profit. Now, as time passed, the share slowly started climbing up. The IVs cooled down, the option premiums went down, and it moved in my favor. And that patience did pay off. The positions were able to, I was able to finally exit them at a profit. Now, you might be wondering why I exited the positions around 22nd February and not hold on till the month end and eat on that extrinsic value that was still left in the straddles. Now, I have a theory or philosophy, you could say, that if a position goes way against me, firstly, I try and look for a proper exit. I look for a decent exit where I might be able to get out with a small loss. I do not intend to, make a profit on those positions. I try firstly to minimize my losses. So when the share reached 170.72, it was right between my two straddles of 155 and 185. So I thought this is the perfect place to exit the positions, and since the loss had been completely wiped off and the position was in a profit, I thought let's take this trade off, because it had come from a really huge loss to a profit. So I did not want to risk it going back down, or seeing the momentum in the counter. I did not want to risk it having a further up move and eroding my profits again and putting me back into a loss. So I chose to exit the entire position. Now, what really went in my favor? There are three things. The first of those three things is my position sizing, the initial position sizing that I had. When I put on the initial positions, my position sizing was such that firstly, my max loss, that was something I was comfortable with. Secondly, I had spare capital to deploy in case things went really against me. So what this position sizing did was it helped me stay in control. It did not let me panic. Now imagine a scenario where I had a bigger position. In the morning when Tata Motors would have gapped down 30%, I would have seen a much bigger loss, and I would have been in a scenario where I might have booked half my positions or taken off the entire trade or some of it, and there might be a scenario where you'd not be able to put on more positions because you're already seeing a big MTM loss. So that is what a small position size helps you do. It lets you stay in the trade. It lets you keep patience, and it lets you hold on to those losses, and it helps you keep your cool and focus on the current scenario and manage positions well. Now, coming to the second point, I feel there are two things which can kill a trader. The first is over leveraging, and the second is lack of patience. Patience is something which is really important for a trader. That is what I feel, and especially for an option seller, because there are often times where positions go against you, and you start seeing MTM losses. When you're an option seller, as time passes, you're able to, if you're able to manage your positions well, those MTMs fade away or your losses come down, provided number one point is checked off. So you need to have patience. You need to hold on to your losses. It's not that the moment you see some loss you exit the position, or you come into panic. No, you need to keep some patience. You need to have some confidence on yourself, and obviously if things really go against you, follow your plan. If the loss limit gets breached, you need to exit the position, but till that time, at least stay in the trade, hold on to that, and have patience. And the last thing is having some guts. Now, this is something which a trader really needs to have, and by guts I mean the ability to see MTMs. When I say seeing MTMs, I do not mean that keep holding on to your losers, keep sitting on to losses and just staying in hope that the trade would move into your favor. I do not mean that. What I mean by that is, you need to be able to sit in the trade. You need to see MTM losses. You need not panic and run out of a trade, even if your stop loss is far away, if your loss limit has not been hit. You can't just, exit a trade because thinking that, you might incur a bigger loss. You need to hold on to it. You need to sit and that in that trade, wait for your stop loss or your level of stop loss to be hit. Only then exit the trade. Have the guts to see some losses, and that is only how you'll be able to see some profits. That is what I feel. So those are the three things that help me make this trade profitable: position sizing, patience, and lastly, some guts. I hope this video was of some help to you. This gave something to you. You took something away that will help you manage your positions better. That will help you trade better. Now, if you have some points that you'd like to mention or something else you'd have done differently, like managing the position in some different way, or you'd like to share an experience of your own, you're most welcome to do that. Would love to hear your comments. Thank you.